Something extraordinary is happening in the silver market right now. The United States Mint reprices silver eagle coins, and the prices are going exponential. If you're holding physical silver or silver investments, you need to understand why this moment could be the opportunity of a lifetime. What we are witnessing is not just another price fluctuation. We're watching the entire paper-silver system crack at its foundations. And when it finally breaks, the upside for silver investors will be absolutely explosive. Disclaimer. Let me start with something that should send shivers down the spine of anyone paying attention to precious metals. The United States Mint, the official government institution responsible for producing American silver coins, has quietly repriced silver eagle coins, and the numbers are absolutely staggering. Meanwhile, COMEX paper silver is trading around $90 an ounce, but here's the kicker. Mint sales remain completely suspended. The status simply reads, not available. Just let that sink in for a moment. When the US Mint halts sales and then raises prices anyway while remaining closed, this isn't some random administrative decision. This is price discovery happening in real time without available inventory, and it's telling us something critically important that most people are completely missing. Think about what this actually means. The Mint cannot source silver cheaply enough to sell at current COMEX prices. Physical demand is exceeding deliverable supply by such a massive margin that they literally cannot keep up. The COMEX price and the real world price have completely divorced from each other. By repricing before reopening, they're essentially front-running reality. They're signaling where silver is actually headed, not where the manipulated paper price says it's been. This is not retail hype or some conspiracy theory. This is official government pricing behavior, screaming that something fundamental has broken in the market. Paper markets, trade promises, abstractions, contracts that may never result in physical delivery. But the Mint has to price metal they actually have to deliver to customers. If $90 were the real price of silver, sales wouldn't be suspended. Premiums wouldn't be exploding to levels we've never seen before. Prices wouldn't be adjusted upward while the doors remain closed to buyers. This is exactly what stress looks like, right before repricing goes completely vertical. Silver doesn't need hype at this point. What silver needs is delivery. And right now, delivery has become the single biggest problem in the entire market, which is massively bullish for anyone holding the physical metal. Now let's look at the concrete evidence that proves this isn't speculation. The US Mint didn't just slightly adjust their prices, they nearly doubled them. Proof silver eagles were hiked a jaw-dropping 82% from $95 to $173 per ounce. Backdated uncirculated silver eagles jumped 86% from $91 to $169. These aren't minor adjustments. These are panic moves. These are the actions of an institution that knows the current paper price is completely detached from the cost of actually acquiring and delivering physical silver. For silver investors, this is incredibly bullish because it confirms what we've been saying all along. The paper price is a lie, and the real price of physical silver is multiples higher than what's being reported on financial networks. But it gets even better for those of us positioned in silver. While the Mint is desperately repricing and suspending sales, let's examine what's happening over at the COMEX, the exchange that's supposed to be the center of legitimate silver trading. Yesterday, the silver market traded 1.12 billion paper ounces. That's over 1 billion ounces of silver changing hands on paper contracts. Now here's the part that should make every silver investor's jaw drop. The COMEX had 0 deliveries, not one single ounce. Meanwhile, the LBMA in London had just 1,266 ounces delivered. Think about that ratio. Over 1 billion paper ounces traded. The COMEX couldn't even facilitate one delivery. This does not just show you that the COMEX is struggling. This shows you the COMEX is already dead. It's a zombie institution trading phantom silver that doesn't exist in deliverable form. This is the most bullish setup imaginable for silver investors, because what we're seeing is the final phase before the paper manipulation scheme completely collapses. When billions of ounces are trading on paper, but physical delivery has ground to a halt, you're watching the endgame of a fractional reserve system that's run out of reserves. Every day this continues. Every day the disconnect grows wider. The eventual repricing becomes more violent and more profitable for those holding real metal. The bankster cartel knows this, and they fought with everything they had this past week to crash the silver price. They threw an absolute ton of paper contracts at the market multiple times, desperately trying to shake out weak hands and maintain their control. But here's what's so incredibly bullish. Despite their best efforts, despite throwing everything they had at suppressing the price, silver still closed at $90 an ounce. Not only that, but a gigaton of SLV calls expired in the money, forcing the system to acknowledge that demand is real and overwhelming. Their desperate attempts to crush the price only managed to show the entire world just how strong the demand for physical silver truly is. They're losing control, and every attack they make only exposes their weakness further. For silver investors, watching the cartel burn through ammunition while failing to achieve their objectives is confirmation that we're on the right side of this trade. And now the evidence of stress in the system is becoming absolutely undeniable. According to the latest COMEX Silver Depository report, we are watching what can only be described as a run on COMEX silver inventory developing right before our eyes. The numbers are staggering. 1,427,000 ounces withdrawn from Asahi, 1,200,000 ounces withdrawn from CNT, 1,290,000 ounces withdrawn from JP Morgan, over 300,000 ounces withdrawn from Loomis. When you add up all the registered silver adjustments and withdrawals, total COMEX registered silver declined by 2.57 million ounces, dropping to just 120 million ounces remaining. Total COMEX silver inventory declined by over 4 million ounces to 429 million ounces. This is a full-blown run on the bank, except the bank is the COMEX and the deposits are silver that industrial users, nations, and smart investors desperately need. For those of us holding silver, this is the moment we've been waiting for. The inventory is evaporating. With the LBMA free float already dangerously low and the Trump administration completing their Section 232 review without implementing U.S. tariffs on critical minerals for now, the bullion banksters are in an impossible position. They're scrambling to ship silver in volume from the CME back across the pond to the LBMA, where it's being continually vaporized by insatiable demand from India and China. But here's their nightmare scenario and our massive opportunity. The CME sustained 40 million ounces of silver delivery notices over just the first 2 weeks of January. The cartel's game of silver whack-a-mole is playing with fire because every ounce they pull from the CME today to put out fires in London could come back to bite them viciously come March, which is shaping up to be an absolutely monstrous delivery month. Now, I need to address something important that some people in the silver community keep getting wrong, because understanding this makes the current situation even more bullish for physical silver holders. Some people keep saying the bankers are going long silver, that they're on our side now. Let me be crystal clear. Stop saying the bankers are long silver. The day the bankers actually go long silver is the same day fiat currency ends. Think about what that means. The banking cartel's entire existence depends on maintaining the fiat currency system. Silver, along with gold, represents the antithesis of that system. It's real money, not debt-based paper promises. The banksters cannot afford to let silver rise to its true value because doing so would expose the fundamental fraud of the entire monetary system. Their desperation to suppress silver is not just about one commodity. It's about protecting the foundation of their power structure. And that's exactly why this moment is so incredibly bullish for silver investors. The infrastructure supporting the paper silver market is cracking under the weight of its own fraud. Paper promises can no longer deliver physical metal at anything close to the stated price. And when that reality becomes undeniable to the broader market, the repricing will be historic. We're not talking about silver going from $90 to $120. We're talking about silver reaching its true monetary value, which could be multiples of the current suppressed price. The evidence is everywhere if you know where to look. Many local coin shops are facing serious cash flow issues right now. You're seeing offers as low as $10 to $15 below spot for $9.99 fine silver. Now, this isn't primarily because refiners are rejecting their inventory outright. It's because transaction volume is at all-time highs, absolutely tying up their capital and restricting liquidity. Some dealers are even refusing to take 90% silver, what we call junk or constitutional silver altogether. Many refiners have paused or completely limited acceptance of anything below $9.99 fine during these backlog and liquidity crunches. These industry bottlenecks are creating temporary opportunities for savvy buyers, but they're also confirming the bigger picture. The physical silver market is operating at maximum capacity and stress levels. This is what happens when paper price suppression meets overwhelming physical demand. The system breaks at its weakest points, and right now those weak points are everywhere. For those of us invested in silver, whether physical metal or silver mining stocks, the technical action we're seeing should fill us with confidence. Gold and silver stocks snapped right back higher after that very quick drop we saw recently. There are some seriously strong buyers out there, and that's an incredibly positive sign that we're entering the stage of gold and silver stock revaluations. A major catch-up phase is desperately needed. We could see a similar magnitude move like the gold to silver ratio experienced last year, but potentially even more dramatic in the mining stocks. When the paper market finally breaks and physical prices are forced to reflect reality, the leverage in quality silver mining companies will be absolutely explosive. Here's the bottom line for every silver investor watching this video. The system is breaking right now, in real time, and we're among the fortunate few who understand what's happening before the mainstream catches on. The US Mint is repricing dramatically while keeping sales suspended. COMEX is trading billions in paper ounces while delivering nothing. 4 million ounces have been withdrawn from COMEX vaults in just days. The bankster cartel is throwing everything they have at price suppression and failing. Local dealers are experiencing unprecedented volume and liquidity stress. Every single data point confirms the same story. Paper silver is a fiction, physical silver is scarce, and the gap between promise and reality is about to close violently in favor of those holding the real metal. This isn't about hoping silver goes up. This is about recognizing that the current price is artificial, maintained only through manipulation that's visibly failing. When the mint can't source silver at COMEX prices, when the COMEX can't deliver, despite trading billions of paper ounces, when vaults are being drained at an accelerating pace, when dealers are drowning in transaction volume they can't handle, you're not looking at a healthy market temporarily correcting. You're looking at a broken system in its final days before a forced reset. For silver investors, the message is simple. Hold your physical metal, add to positions if you can during these artificially suppressed prices, and prepare for the revaluation that's coming. The evidence isn't subtle anymore. The system is breaking, delivery is the problem, and those holding physical silver when the paper market finally implodes will be positioned for wealth preservation and generation on a scale most people can't imagine. The infrastructure is cracking, the lies are being exposed, and the real price discovery is coming. Stay bullish, stay informed, and most importantly, stay positioned in physical silver and quality silver investments. The opportunity in front of us is historic. But what is your opinion on this? Comment down below. If you're curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important silver update might make you lose money, so don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.